Dilshan, to start the conversation on, not too long ago, I mean, if you look back at the last 2 years, we went through a complete turmoil of economy and inflation rates were going up. Amidst a situation like that, as an expert, how do you advise our audience about saving and managing wealth?
Sure. So I think there's a misconception of people looking at interest rates and believing that that is the return that you get on your investment or savings. So I want to make this distinction between nominal interest rates and real interest rates, right? Or nominal rate of return and real rate of return. And I think the difference is taking inflation into account. So nominal interest rate is the gross interest rate, the simple interest rate you will get paid. So we'll say if you have a 1 year FD and you're paid 10%, that is your nominal rate of return.
Right.
Now, then you need to look at inflation, and we'll say inflation is 8%. We'll just assume it's 8%. You deduct inflation and your real rate of return is then 2%, right? So your money is only growing, or your purchasing power is only growing by 2%. It's not growing by the nominal interest rate.
Right.
So I think that is something that a lot of Sri Lankans don't understand, don't know, don't focus on, right? So that I think is the first point to sort of take note of. If you look at the economic crisis that unfolded in 2022, we had inflation touching 70% at its peak, right? I think the average inflation for that year would have been over 50%.
Right.
Now, what that means is that if you had not invested or you didn't get a nominal interest rate above that inflation rate, that your money actually lost its worth, your purchasing power declined. And sadly, for a lot of Sri Lankans, that was the fact, because there wasn't a investment opportunity out there that would yield you above 50%.
Correct.
Right?
Yeah.
Not in terms of the conventional norms. But there were certain asset classes that held ground, right? So I think if you look at 2022, it's quite unique. It's a one-off. I don't think, and I certainly hope and pray that we never see that happen again.
Surely.
But essentially what happened was that we faced the economic crisis, we ran out of foreign currency, and then obviously the central bank had to depreciate the currency in one go. Overnight, you had an exchange rate of 200 that went to 360 in a matter of a day, right? So you had a correction of about a 70% on the currency that would have translated to any imported goods being more expensive by that margin. Right. So, we are an import-dependent country. There is, imports outweigh our exports. So most goods and services got repriced based on that. And obviously then you have essential items like fuel or utilities that also are priced off international markets. We did those changes in 2022. So fuel prices, electricity, everything virtually sort of doubled.
Right.
Again, I'm using the context of double to make the explanation easy and simple. So if you had, prices of goods and services doubling, and your amount of money at a given point, and this happened sort of overnight, I think Sri Lankans essentially, their wealth halved in a day. So even for you and I, if you had money in the bank or invested wherever, the purchasing power of your money sort of lost ground by approximately 50%. So how do you recoup that, right? So that's really what I think investing is about. Forecasting that, looking at that, and choosing assets that will outperform inflation and therefore then grow your wealth. One example, I think, in that shock was gold. So had you chosen to invest in gold, and we know we don't produce gold is imported, gold is pegged to the US dollar, had your wealth been stored in inflation, you wouldn't have lost a single cent. Right, because it's locked in. The price of gold also kept pace with the dollar, kept pace with inflation, and your wealth would have essentially been the same. Now, not all Sri Lankans have the ability to store their wealth in gold, and obviously it's not practical to have all your wealth in one asset class, but choosing asset classes that outperform inflation is really the key or the trick here.